All right. First of all, give yourself a round of applause for holding on and remaining in the room. Well done. Okay, so I'm going to talk to you about what finance might look like in 2034, almost 10 years from now. And especially, I'm going to talk to you about how DeFi is maybe going to change how traditional finance operates today. So what is this DeFi topic? We've learned a lot about it over the last 2 days. But here's a definition: a new financial paradigm that leverages distributed ledger technologies or blockchains to offer services such as lending, investing, or exchanging crypto assets without relying on an intermediary that we know and that many of us work for. There's a very interesting book, if you haven't seen it yet, by Cam Harvey and co-authors. And what I really stole from this book is this little table that lists a bunch of interesting opportunities that DeFi offers to us, but also some idiosyncratic risks, some risks that maybe in traditional finance we're not so familiar with. So if you're interested in learning more about those risks, this book is a good reference. Unfortunately, because we are running out of time, I cannot go through all of them. So why should we even care about what DeFi is all about? Some people say, well, total value locked is shooting through the roof. You know, there's a lot of crypto speculation. Is that really the reason why we should care about DeFi today? I argue no. There's an interesting article by Andreas Park and Katarina Malinova. And what they basically did, super interesting, they said, okay, what would happen if we would take some of the DeFi primitives and we would run the US stock market on top of it? And what they find is on the slide. There's billions and billions of dollars that actually could be saved by replacing some of the legacy technology with DeFi. Now, that is a reason for all of us to pay a little bit of attention, I think. Let me talk a little bit about the research that I want to present to you today. So there's already a growing body of research from different disciplines, look into how these DeFi platforms work, how their governance actually is designed, what are the risks, what are the opportunities. And people from all sorts of different areas in academia look at it, right? Whether it's computer scientists, whether it's economists, whether it's people from organizational theory. But then I found this gap, and this is the topic of my presentation today, and that is to really understand a little bit more what the impact of DeFi would be on traditional finance. And also, if we work in traditional finance, what would be the skills and the competencies that we need to survive in a world where DeFi is perhaps a little bit more important than it is today? All right, so let's go straight into it. I created this questionnaire, and I put it in front of 109 experts. So we call this thing an expert elicitation. So it's a little bit different than a traditional survey. And once I created the questions, I also asked 2 specialists to review them to make sure that there's a little bit of quality control. Actually, I'll skip through this because I'm also looking at the time. But basically, the feedback that we got after sending out the survey was good enough to say, okay, this is relevant. All right? So we have 3 different groups that we included here. We have people who work in the DeFi industry. We have people who research DeFi from an academic standpoint. And then we have people that attended my class on decentralized finance. And something that's worth noting here is that most of the people who attended my class actually work for a regulator. So you would expect that they have very conservative views. Yeah? So really good mix. Here's a little word cloud to show who attended the class, and then you can see the word regulator pops out rather prominently. Okay. This is a distribution of countries that have participated, and yes, there's a very high bias on Singapore. You might say, oh, maybe it's not so relevant then for us, but don't forget that Singapore is also a bit of a fintech hub. We had Sobnendo talk earlier today about everything that he's achieved. So arguably, if we don't know how to do it in Singapore, maybe that's a whole different problem. So let me go straight into the first question. How would you assess the current or the future 2034 level of adoption within financial services of DeFi? That was the first question. And then the answer is, today, oh yeah, I should perhaps say, any charts that I'm showing you are basically showing percentages that are based on the respondents that answered the question with high or very high, okay? So today, the adoption level is pretty much 0, right? In traditional finance, we really don't use DeFi at all. But then, this is the interesting part. In 2034, 43% respond and say this DeFi adoption is going to be much higher. So what does that mean for us today? It basically means that if you haven't already started, it's probably the right time to investigate DeFi and understand it a little bit better. Next question. How do you envision the role of DeFi platforms in shaping the future of what we know as traditional finance? I don't know whether we can see the details, but I'll walk you through this thing. Sorry, I got too quick. So very large group, very small group of people say DeFi platforms don't matter. A few more say that there is probably quite an important role for DeFi, but it's going to be super regulated. Then we have another group, if my clicker works. Oh, I got too fast. Many folks believe that there's going to be some sort of collaboration between traditional financial institutions and also DeFi platforms. And then again, there's a smaller group that says DeFi is going to take over the world. Arguably, that's probably less likely. But if you take this all together, what we're saying here is that 70% of the participants really believe that DeFi will be at least causing some sort of disruption over the next 10 years. Let that sink in, huh? 70%, more than 2/3. All right, next question. How would you rate the following possible scenarios? So what we did here is we put 5 scenarios in front of the participants to ask them what scenario is going to be most likely. All right? And here are the description of the scenarios. We go from 1 to 5. 1 is finance as usual, basically nothing changes. And then through a few iterations, we get to 5, finance for planet, people, and common good, where we basically have the crypto degen dream come true. And here are the results. So the most likely 2 are TradFi embraces DeFi, and then also highly regulated DeFi worlds. So you can see here that this collaboration idea reappears. And it's very important because whether we are in DeFi or in traditional finance, both of us probably should get ready to do something together rather than to say, oh, the other one is really bad. Also note that finance as usual doesn't really feature as a very prominent scenario. So if you assume that nothing's going to happen and this is a fad and it's going to go away, that seems like rather unlikely. So try to strategize for a scenario where DeFi is in the mix, okay? Maybe you have different views on how big a role it plays, but it's not going to be not there. All right. We then asked, what are the business areas or processes that will be most impacted by this DeFi topic? And here are the results. Risk management, obviously, and operations seem to be the areas that will be most impacted. And if you think about it, it makes sense, because I showed you a list of idiosyncratic risks before, and therefore most adoption or adaptation of current processes and systems are probably in the area of risk. What is least concern? HR. That's also interesting, right? Because some people say, well, if DeFi makes its way in, we're all going to lose our job. Doesn't seem like it. Okay, what else do we have? Sorry, I'm struggling with the clicker a little bit. Next question was around issues and potential problems, right? Where do we expect friction? And then, again, these are the results. And the greatest concern is clearly around security, and then followed by data management and privacy. And that's also not surprising, right? If you think about how current blockchains look like, they're very open. They don't have privacy protection features enabled yet. That seems like a reasonable concern. Some people that haven't looked at crypto as much as you all have still have this idea, oh, maybe blockchain is very bad for the environment. So here are 109 experts saying that impact on the environment is we can neglect that because it is so small. So if you haven't looked very deeply into all of these cryptographic primitives that allow for compliant but private finance, then I suggest you start looking into it. Sorry, I'm really struggling with this. Okay, next question is around custom. Let me just go back because I want to make sure I didn't. Yeah, okay. Next question is about customer service and the customer experience. So some people say, oh, blockchain is very clunky. Some people say, oh, banks are very clunky too. So what do our experts say here? Very small group says very minimal impact. A third of all the respondents say that there will be some minor impact on customer service. But then there's also another third that says DeFi is going to play quite an important role in customer service going forward. And of course, you have very small group that says, yeah, DeFi is really going to make a dent in the area of customer service. So if you were to synthesize what we're hearing here, basically, there's around half of the people that responded that say that DeFi is not a problem to customer service, but an opportunity. Yeah? So that's interesting, because if you Google customer service and blockchain, all you will find is a whole set of issues with wallets, they're difficult to manage, and so on and so forth. But then here, experts say there is a bit of an opportunity. Okay, now let's talk a little bit about competencies. So we have a bit of a gist of how things might look like in 2034. What does that mean for us as individuals who work either in a fintech or in a fully licensed bank? So the question is really around competencies and how we, this is maybe not readable, but I'll walk you through. How we thought about it is that there are general capabilities to deal with DeFi would be one of them, but then you have two layers that you can go further into detail, right? And layer 2 talks about perhaps sector-specific competencies, so this would be understanding DeFi primitives and so on. Then you would have technological competencies, which are all around software development kits and the hardware and the validation, privacy, and so on. But then you also have softer skills that are required, right? Cognitive skills, for example, or interactional skills. Even strategy might matter, right? Because at the senior level, an organization has to make a call. Are we going to engage with this? How much are we going to engage with this? And then eventually there's also ethical considerations, because not everything in DeFi you can call ethical today. So here again are the results. And the main takeaway is that all of these competencies are perceived to be more important in 2034 than they are today. Okay, so that's the first take home. The second one is that strategic competencies, so trying to make that strategic discussion about how you engage with DeFi, are rated even higher than understanding how DeFi primitives work themselves. I thought that was very surprising, because I thought, oh, maybe everyone's going to say, no, you need to understand how a zero knowledge proof works or something like that. But no, the strategy component is more important. So there are a few limitations to my study. I also have to be transparent as a researcher. And of course, surveys measure beliefs, not actions. So whether everything is going to come true that the 109 respondents, expert respondents say, we will see. I also disclosed as well, there's a bit of a Singapore bias in my respondents. But then again, there's also lots of good stuff happening in Singapore. And then there's also quantitative analysis that I could strengthen, and I think I'm working on that right now. What else could we do to understand this better, to help institutions get ready for the future? Well, perhaps we can build some theoretical models around how these competencies should be developed. We could also run the survey every year to see whether there are changes from one year over the next. And of course, you can also dive a lot deeper into the specific competencies to make a better call. I got 4 minutes and something. So I'm going to summarize what we just went through. First, nobody really believes that DeFi is important today. But remember on the slide, we also saw that 43.x% said that in 2034 is going to be either high or very high importance level. 70% of participants in the survey believe that there will be at least limited disruption of the financial services industry. So more than 2/3. Don't forget that number. If you look at the scenarios, TradFi embraces DeFi and regulated DeFi, which both imply that there's collaboration between DeFi protocols and our institutions of today, seem the most likely outcomes here. And if we look at where DeFi makes the most, causes the most trouble or creates the most work for us, then it's in risk management and operations. And if we think about the most important issues, if you remember, security and data management and privacy are ranked highest. And then last, don't forget that about half of the respondents suggest that DeFi is an opportunity customer service rather than a challenge. Okay. Let me see whether I can do this. When we talk about competencies, remember that all the competencies that we talked about matter more in 10 years' time than today. And so in my mind, and this is what I want to leave you with, perhaps the riskiest action that you can take is to do nothing. Right? If you do nothing, then that's probably really not very good. So hopefully you enjoyed, number one, the entire conference, 2 days of really interesting content. Hopefully you enjoyed a little bit my keynote as well. So now here's the task for you. There's going to be Istanbul FinTech Week next year. So you got about 12 months to absorb and reflect on everything that you heard, but also content of my keynote, and try to figure out what you're going to do with your DeFi strategy and how you're going to approach this topic. And before I leave you, 2 more things. One is, I got a book, so I got to really plug it, okay? So this is a book about how DAOs, the organizational form that DeFi usually uses, can interact with finance, or the other way around. So that might be of interest if you wanted to hear a little bit more than just 20 minutes about this topic. And then also, I just wanted to leave you with my details, because sometimes you hear the keynote and then you walk out and then you say, I wish I can ask the guy about X or Y. The best way to get hold of me is on LinkedIn. And if you wanted to ask any follow-up questions, then please get in touch. And with that, I get to close the event, I guess. Or maybe there's somebody after me. But thank you very much.
So there are different ways to tokenize things. And so some of that will be, you compare it to, say, a mutual fund or an ETF. So the ETF is still a security, even though it has securities also in it. It's a basket of securities. So that's the similar thing with a tokenized asset. And but we need to make sure that the rules that apply for disclosure and issuance and all that can accommodate, the special features of tokenization. And it's much more efficient, perhaps, to have a tokenized security than some other sorts of things. But we need to make sure that we have a level playing field, that people are certain how to go forward. So that's going to be unfolding as we address these issues.
And how do you ensure that investors are going to get the best price if stocks are trading on the blockchain?
Well, I think the markets will accommodate that. I mean, obviously, with actively traded things, you have very straightforward, you have the opportunity for current valuation that's, again, because of the way the blockchain works, I mean, that's a transparent aspect. So as the current financial system then adapts to accommodate these new forms of securities, I think there will be, just like we have now, national best bid and offer prices and all of that. I think that we will make sure that new forms of securities will mesh in with the rules, and that the rules will accommodate that sort of trading and that openness and and the publicity of the prices.
You're calling for on-chain markets. What exactly are you calling for there? Do you want all securities to be tokenized?
Perhaps. I mean, when you look at the whole arc of history, in the 1960s, things were still in paper form, paper securities, and there was so much trading in this big bull market at the end of the 1960s that the New York Stock Exchange and other exchanges had to close for one day a week just to catch up on the paperwork, and because the data processing couldn't accommodate things. And so, and then sometimes 2 days a week because the volume was so heavy. And it's not that they had quill pens to write in the ledger to, show the transfer of stocks, but, they had to build the systems to accommodate all that. The SEC at the time helped the industry through helping them change the rules so that they could immobilize securities, have book entry. The Depository Trust and Trading Corporation came about, which is a cooperative of securities firms to try to do that book entry transfer of stocks. So that was a huge watershed. So I think we are perhaps at the similar point now where who knows how this technology will develop. I certainly don't have a crystal ball. 5 years from now, it could be completely different. So we want to be in a good place. We're accommodating that. We're not an impediment to innovation.
Under the last administration, the Howey test was used to administer whether a crypto asset was a security or not. And it was deemed that most crypto assets were considered securities. I know you are of the opposite school of thought, that many crypto assets are not considered securities. Is the Howey test germane in your view at this point? Is it applicable, or is the SEC looking at creating a brand new yardstick to create a clearer definition for what defines a security or not?
Well, great question. The Howey test is named after a Supreme Court case back 80 years ago. It had to do with orange groves and oranges. So that's completely different than tokenized securities or tokenized assets. And so what we have to do is, it was a Supreme Court ruling. So that's the law of the land. It interpreted the term investment contract, which is in the securities laws, but Congress in those laws didn't define that. So thus, the Supreme Court took a stab at it that worked for that one particular case and has been applied, for years after. So now we're now in the 21st century. So, and dealing with digital assets. So the SEC has authority to interpret that term. And so we are going to set out to have rules that comply with the law and obviously build upon that, and to help people understand how that applies to the current situation.
You said in a speech yesterday that in the coming months, the SEC will consider using authorities to make sure that any archaic laws that are squelching innovation and entrepreneurship are revoked. What could we see stripped away?
Well, that's a good question. I don't want to prejudge anything, so we're going to have to do this in a very straightforward and diligent manner, obviously. But there are a lot of things that apply to, say, operating companies like a steel company or something like that that's manufacturing steel, that doesn't apply to maybe a digital-oriented company. And so as far as the products go and whether or not those particular products themselves need to be registered as securities or not. So again, we need to make sure that the forms that people need to fill out in order to declare and publicize to the SEC and to the public what their product is, what it's supposed to do, what the innovation is, or what the purpose is, so that our rules can accommodate those particular aspects of these new products.
Switching gears a bit, investors who are eagerly anticipating the proposed Truth Social Bitcoin ETF are going to have to wait, because the SEC has apparently postponed a decision on that until September 18th. Could you tell us why the delay? Are there any concerns there, or what's going on?
No, it's part of the normal process of deliberation internally. So it's an active matter, so I can't really comment on it. But just to caution people that just because there is a temporary pause in that. That doesn't mean that it's not going to be, deemed effective ultimately. So anyway, so this is a normal process. You look at, the other products that come. So there's, we're going to get through that, and we'll.
You know that feeling when you're slammed?
DeFi protocols are showing. Alrighty, everybody, what is going on? Welcome back to another CyberX video banger. In today's video, we're going to be discussing and talking about some ongoing DeFi developments that are going to significantly increase the demand over the coming months and years for the price of the digital asset XRP. Things that we've been discussing and talking about in the DeFi ecosystem on the XRPL for quite some time are finally materializing and coming into fruition, as we have here announced by Strobe Finance. So shout out to Strobe Finance for this achievement. Strobe Finance mainnet is now live. They are thrilled to bring natively accessible DeFi to the XRP ledger. Over the past consecutive couple of months, we have been covering DeFi developments on the XRPL, both from Flare, from other protocols, and also Strobe Finance. And so it's really great to see this finally materialize and come into fruition. So we're going to jump into this today. I'm going to show you guys some free resources that you all can tap into, so that way you can take it upon yourselves and go learn about this, educate yourselves in the now, so that way when you're comfortable with the regulatory environment, when you're comfortable with the risk parameters, you can go out and possibly start to generate yield on your idle XRP. Again, not financial advice, but always do your own personal research. So Strobe is bringing a new money market to the XRPL, unlocking yield, borrowing, and composability, all powered by PeerSys, EVM sidechain, XLR cross-chain messaging, and Xamin wallet, where users can put their XRP to work, keep control of their assets, earn and borrow with ease directly from the XRPL. We do the heavy lifting in the background. Welcome to native XRP Fi. So this is just such a massive achievement, considering that we've been covering Strobe Finance on the CyberX YouTube from ground zero. And so really great to see these developments. But I really want to show you guys that the mindset from institutions is shifting at a very rapid pace, keeping in mind that Strobe Finance and other protocols like Firelight, built out on the Flare network, are built for both retail and institutions alike. And so we are entering into an era where institutions are starting to pick up on these DeFi capabilities and generating yield on their idle digital assets. And if they're not already doing it, they will most likely do it in the future, especially when the regulatory environment aligns with institutional requirements. So here I posted this for you guys to always put my money where my mouth is at and show you guys documented and panel discussion proof from industry leading experts that actually matter in this space. Here is a document where I said, unlocking institutional participation at scale, mentioning significant opportunities. Does this vocab seem like institutions are fearful? No, it doesn't. Lock in. And so this is a 2025 KPMG, a major consulting firm, report titled Futures Report, Seizing Opportunities in an Era of Disruption. This is from June 2025. Shout out to the CyberX researchers for this one. And if we go into the nitty gritty of this document, it says here, as digital assets continue to grow in importance, they won't replace traditional finance, but will incrementally alter its foundational framework. Really good vocabulary there. The result is a financial system that is more programmable, transparent, and accessible, where new systems coexist with existing ones. This change creates significant opportunities for innovation. And then here in fine detail, it talks about, meanwhile, decentralized finance, i.e. DeFi protocols, are showing renewed growth, reflecting a broader revival in blockchain-based financial tools. This digital transformation was unmistakable, unlocking institutional participation at scale. After years of ambiguity, new clarity in digital asset regulation is enabling enterprises, financial institutions, and governments to act decisively. This regulatory momentum has laid the foundation for deeper engagement across the digital asset spectrum. And down here at the bottom, it mentions operating on Stellar, Avalanche, Ethereum, Arbitrum, Base, Solana, and Aptos. These firms are developing tools that are scalable, interoperable, and enterprise compatible. And now I will also add in there the XRPL. And then right down here at the bottom, it mentions industry conversations have matured, and the focus is no longer on the novelty of blockchain, but on its practical applications. So that was just really great to see, because that coexists, that document from KPMG coexists with this video breakdown of this panel discussion of institutional organizations and huge institutional grade protocols talking on stage at Innovate Denver, where I went out to post a clip of this particular panel discussion. And I said here, institutional money flips quickly after a couple of first movers. We've officially reached the point where not getting involved in DeFi is becoming the bigger risk for institutions. Now, that quote right there coexists with something that Jazzy Cooper just recently said on stage at Apex 2025.
We're at a turning point. Public chains were once seen as too risky for institutions, and now it's too risky for institutions not to integrate them with their business. Institutions have truly embraced blockchain and are finally launching real products on public chains, including the Xrp ledger. And Xrpl is evolving to meet that demand. Over the past year, a number of key features have gone live, ranging from the automated market maker to decentralized identity, price oracles, and clawback. And we have others that are still in voting: credentials, MPTs, permission domains. These features are foundational infrastructure for building secure, transparent, and scalable financial products. And we're not just modernizing finance, we're making it more inclusive, accessible, and programmable. And we're finally seeing real traction. Xrpl is supporting real-world applications ranging from payments to yield generation, all decentralized and at scale.
Smart money has already started pivoting. Retail should take note of this shift, and it is time now to get ahead by learning how to leverage DeFi strategies that are now being embraced by both institutional giants and everyday investors. For example, Firelight and Strobe Finance. Go out. I encourage you guys, read the documents, tune into their Twitter spaces. And then if you want to take it a step further, you can tap into the CyberX Wealth 28 Club so you can see us test out these protocols within our own portfolio, risking our own digital assets, so you can learn from our trials and tribulations. Learning does not require that you risk your crypto. This is your time to build confidence through education so that when security, regulation, and insurance frameworks are fully in place, you're not scrambling to catch up, you're ready to earn yield and deploy with clarity and conviction. Take a second and listen to what this gentleman here on stage has to say.
I think very much agree with Rob. I think this year in particular, we're hitting that inflection point in terms of institutional adoption of DeFi, right? Because especially if you kind of take a look from the more global perspective, right? You have firms like Laser Digital, which is a Nomura subsidiary, direct subsidiary, right? With the explicit mandate to actively trade in crypto and market making crypto. And then you have, Middle Eastern sovereigns, right? Putting Bitcoin on their balance sheet and be very public about it. And I think to Rob's point, a lot of the DeFi plumbing that was first kind of pioneered in like DeFi Summit 2021, right? They've gone through like V2, V3, been battle tested and can start taking institutional positions in size. And in addition, I think there's a lot of tailwinds with Bitcoin ETF adoption, right? Where you have now, Larry Fink of BlackRock kind of going on MSNBC and like bull posting and like really championing not just Bitcoin, but crypto as a whole, right? Whereas I think really turning the landscape to, I think oftentimes, right, in kind of institution and enterprise environments, sometimes things flip pretty quickly after a couple first movers from, okay, we don't want to touch DeFi, like that's too risky, to what is our DeFi strategy, right? Why do we now have a DeFi strategy? We saw this with Metaverse, right, last cycle, and then I think we're seeing this with DeFi now.
I just want to respond to one thing, to the regulatory point. I think you're completely spot on for what the attitude has been. The president of the United States launched a token entirely permissionless on DeFi rails literally a month ago. And if that isn't a thumbs up and a green flag to come on in, then I don't know what is.
That's for sure. Yeah.
Right. So a really great panel discussion where they're talking about institutions engaging with DeFi and how the landscape has matured significantly from what it was back in the day, 2021 to 2022, which for some odd reason is where the vast majority of mindsets seem to be in the retail space. It's almost as if people aren't doing the research and understanding that the DeFi landscape has matured significantly since then. So don't take it from me, take it from other institutional leading experts or people that stem from organizations that work directly with some of the largest organizations in the game. Tell you guys that these institutions are 110% considering coming into the DeFi ecosystem and participating in lending and borrowing. So This is Emmy Lorenz. Hopefully I'm pronouncing her name correctly. She stems from Talos. Why are we listening to individuals from these organizations? Well, if you don't know who Talos is, if we come over here directly to their website, it mentions that they empower institutions to trade and manage digital assets securely. But who are they partnered with? Who are they trusted by? This is important because, again, you want to gather insights from people whose opinions actually matter in the space. And the people whose opinions actually matter in the space are telling you guys that now is the time to get educated in DeFi because the banks are interested. You can see here it says that Talos is trusted by leading global institutions like BCB Group, Anchorage Digital, StoneX. And if that's not enough, you come down here, they are backed by the world's leading digital asset investors like BNY Mellon, Citibank, Wells Fargo, Galaxy, Fidelity, and so on and so forth. Okay. So this lady's opinion actually matters in this space. Why? Because she's probably sitting directly in meetings, closed door meetings, signing NDAs with these organizations that are interested in digital assets and interested in these DeFi protocols or these DeFi primitives, where institutions can get off of the sidelines from sitting idle with their digital assets doing nothing to going and actively participating in the DeFi ecosystem with yield generation or liquidity providing or lending and borrowing, utilizing digital assets as collateral. Listen to what she has to say here.
Emmy, maybe you can chat a little bit more about this because obviously you're serving some of these clients. What kind of DeFi products and services are they actually considering? You know, what's on the table for TradFi in 2025?
Yeah, as I mentioned, we allow them to pull liquidity from Uniswap as well as 1inch. And we consider actually staking, I think, should be considered DeFi as well.
Yeah.
We have an integration with Figment. But what is also interesting for them is trying out various lending pools. What is also interesting for them is trying out various lending pools. Here I think of Aave or Morpho, for instance. I thought that Coinbase's recent integration with Morpho, it's such a great example how CeFi and DeFi is getting a bit closer and how these institutions can work together. So yeah, for us, yield generation is what we look at besides trading and having adequate liquidity for some of the trading pairs.
Right. So you guys heard it directly from her. Lending, borrowing, providing liquidity, and that these institutions are interested. Interesting to say the least, if we come over here, considering that now Strobe Finance is on mainnet and it is live. Well, if you come over here to their docs, which is something that you guys can participate in going on, educating yourself with, the docs are free. You go over to Strobe Finance, you click on the docs, and you just thoroughly read through everything. The money market tab says, Strobe's protocol money market product supports permissionless lending and over-collateralized borrowing. So long story short, Strobe's contracts on the EVM sidechain offer a permissionless DeFi lending and borrowing experience for users. Now, this is so powerful. Why? Because it comes right after we had a panel discussion titled American Leadership in the Digital Finance Revolution from Chairman Paul Atkins from 3 days ago, where he openly confirmed that he believes that Americans should be able to participate in DeFi primitives like lending and borrowing. Take a second here and listen to this verbal confirmation directly from the SEC chair.
So third, a key priority of my chairmanship is to allow market participants to innovate with super apps. I'm often asked, what do you mean by a super app? Plain and simple, securities intermediaries should be able to offer a broad range of products and services under one roof with a single license. A broker-dealer with an alternative trading system should be able to offer trading in non-security crypto assets alongside crypto asset securities, traditional securities, and other services like crypto asset staking and lending without requiring 50-plus state licenses or multiple federal licenses.
So here you have verbal confirmation posted just 3 days ago, 3 days before the launch of Strobe Finance live on mainnet, verbal confirmation from the SEC chair saying that him and his team firmly believe that market participants should be able to offer both lending and staking services to their clients. This is huge verbal confirmation and just goes to show the shift in the regulatory backdrop that is going to allow institutions to feel comfortable to really onboard into the space with millions and billions of dollars. That is going to drive the total cryptocurrency market cap to new highs, and it is going to significantly increase not only the TVL in the DeFi ecosystem on the Xrpl, but the demand for XRP itself. So just so that way you guys leave today's video call with some free resources, coming over here and just looking at the user interface on Strobe Finance, I'm personally extremely satisfied with this user interface. It's really easy to grasp and understand, especially coming from a platform like Aave and the Private Cyprex Wealth 28 Club, where we've been participating in lending and borrowing digital assets for a long period of time now. Coming over and seeing that the UI is very simplistic and easy to understand, this was just so great. You can already see that right now there's already over $350,000 worth of XRP supplied to the supply side on Strobe Finance. And right now there's over $50,000 being borrowed against that 382,000. So there is a real interest in people wanting to earn yield, supply, and lend out their XRP in order to generate some additional rewards. I'm going to go outright and say and speculate that I personally think that this number on Strobe Finance is going to substantially increase and surpass $1 million in TVL locked on Strobe Finance before the end of the year. Now, coming over here, if you guys want some other free resources, Strobe Finance just released this user guide tutorial, updated documentation on Gitbook, where they have updated docs on Strobe Finance's protocol and a video playlist on YouTube that you guys can go check out on how to tutorial video breakdowns to lend and borrow against your XRP. So this is just really great to see on Strobe Finance's behalf that they're participating and educating their community members on how to utilize their platform. I again suggest that you guys go out there, you tap into the free resources, and you start educating yourself in the DeFi ecosystem to learn how to get your idle digital assets working for you. I will say this again, now is not the time to remain skeptical, sidelined, and dormant in this ever-evolving DeFi ecosystem. Now's the time to go out and actively engage and participate in community forums and Twitter spaces, reading the documents, watching these panel discussions, and watching these tutorial video breakdowns, so that way you are empowered with education. If anybody's interested in locking in with us in the CyberX Wealth 28 Club, you want to see how we are going to utilize the Strobe Finance platform within our own DeFi portfolios, you guys can always head over to cyberxtrading.com. We'd love to have you on the team. Tap in with us. And if not, make sure that you guys tap into those free resources out there, so that way you can learn how to get your digital assets working for you, whether it's you do so now or whether it's you do so in the future. Understanding that we are entering into an era where we're not going to have to sell a portion of our digital assets for fiat currency is so empowering. Hopefully you guys enjoyed today's video breakdown, keeping in mind that I'm not telling you guys to go out there and deploy on Strobe Finance, but what I am asking that you guys do is you take an educational and a mature approach and stop thinking that DeFi is dead in the water, that it's not mature, and that it's not going to continuously evolve over the coming months and years. Now it's the time to lock in, focus on your education, smash that thumbs up button and subscribe to the platform. Hopefully I see you guys with inside the Private CyberX community. And as always, be cognizant, be aware out there, and I'll see you all in the next video breakdown.
Welcome to the second day of the Staking Summit. My name is Benedict from Staking Rewards, and I'm joined by Dom from IOTA. Hi, Dom.
Hello, Benedict.
Very nice having you here. Are you enjoying the summit?
Yeah, it's really great. It's very professionally organized, and I think it really brings together the ecosystem. Most important.
Dom, I understand that there's a reason for you being here now. It has got something to do with staking. Please tell me a little bit about it.
Yeah, like the funny part is that IOTA is like the old new kid on the block, right? Because this year will be our 10th anniversary since the founding of IOTA. So we're like an OG in this space, and we went through every bear and every bull market and have been building and progressing the tech. And obviously, like we're the new kid now on the staking summit and the staking ecosystem as a whole, because we finally have staking rewards with IOTA. So we've been building and developing and evolving the core protocol. And over the last 2 years, we worked on an exciting new mainnet upgrade where we're completely overhauling the layer one and moving to a fully decentralized DPoS-based consensus. And with that, we finally have staking rewards.
This sounds like a really big change. And what was the main reason to go down this road?
The main driver was really that we realized that we have all of these amazing real-world use cases where we have governments and enterprises and also this entire Web3 ecosystem being built around IOTA, but we didn't have programmability on the layer one, right? And so because we started out the journey with IOTA with building a DAG-based ledger, right, which is sort of like this multi-threaded architecture, that we realized that we needed to really now further take it to the next level and introduce programmability. And so that's why we looked at the MoveVM, and we specifically looked at Sui and what they were doing, and we adapted the technology. And over the last 2 years, we were working on this protocol to get it ready for mainnet release, and now we finally have it here. So we are not just introducing staking rewards, but we're also introducing the MoveVM. So we have move-based smart contracts on IOTA.
Wow, this is exciting. I understand the launch is literally around the corner.
Yeah, it's a week away. So on the 5th of May, we will finally have fully upgraded IOTA mainnet. And I invite everybody to join. Make sure you have your precious IOTA tokens with you because you can finally stake them.
I'm definitely going to become a staker.
Right.
As a staker, I mean, I'm a IOTA holder.
Very good.
And what can I do with my tokens now? Can I delegate to a validator or to multiple? Or can I liquid stake and put this in DeFi? What are my options?
All of those. Right. So at the start of the network, obviously the focus is on bootstrapping the network. So we're focused on a core set of validators that are going to help to bootstrap the network. And then over the next couple of months, we'll evolve this to 150 plus validators that will then also be selected through the stake that they have delegated by users. So as a user, you can download the wallet and connect your Ledger wallet and then start staking and delegating to validators. And then, as you mentioned, liquid staking, that's really core to our launch strategy as well, to really make sure that we have liquid staking from day one, so that we can really make sure that we can build up the staking ecosystem while also growing up the entire DeFi ecosystem around IOTA.
Oh, that sounds really exciting. How about running a validator? What is the story? Are you going for professional validators at the moment and open up later for, let's say, the smaller validators? What is the plan?
I think it's important to have a diversity, right? And so what we focus on is onboarding many of the biggest and most legitimate professional validators, but that have done this on other networks because we really want their expertise as well in helping to operate the network and to secure it. We also onboarded actually ecosystem projects that are running validators so they can also onboard and build up the community around the staking. And something that we're doing very in a unique way is that we're actually also working to onboard governments, because one of the unique areas that IOTA is focused on with its adoption is really real-world adoption. Right? So we tokenize real-world assets, we bring those legitimate players on chain, and as part of that strategy, we're also actually helping them to run validators. So this will then also be something that makes IOTA unique, where we have this mixed set of entities that are securing IOTA, because the main objective for us is to be decentralized, to be credibly neutral, to be censorship resistant, and to make sure that IOTA is this open network where anybody can join and participate.
Yeah, let's continue on the participation. In some networks, as a delegator, I can participate in governance. How is it in IOTA?
Governance is definitely something that's very dear to our minds, dear to our core ethos, right? Because we want to make sure that future network upgrades, protocol changes, all get through a governance process, right? This will not be there at the start because it's like something to build, but we really want to gradually get there where all of these changes are being voted on chain by token holders, also make governance decisions on how, for example, the treasury, community treasury, and things like that can be allocated. So while it's not there for the launch, it's definitely something that we want to get to really make sure that we have this fully decentralized governance. And obviously, all protocol upgrades will be voted on by the validators themselves from the get, right? Because otherwise, they're not going to adopt the upgrade, right?
That sounds amazing. What did the summit play any role for you in your go to mainnet, so to say?
I think what you guys really did a great job in is building up an ecosystem around staking, right? And so you are the credibly neutral player that actually can bring together the different layer ones, layer twos, the different ecosystem players, and also the different validators, right? And so I think for us it was very amazing to work together with you guys, right? With staking rewards, and then also meet up with all the different validators that are on our network, with all the different providers and partners, so that we can also meet up here and talk about the launch, which is obviously happening next week.
Wow, this is amazing. Obviously, with the upcoming launch, there are always some heartbeats to watch. Is there anything in particular you're going to be watching over the next days, weeks, and months as we go along?
I mean, the heartbeat is the most important point, right? We want to make sure that we go through the first epochs, make sure that transactions confirm, and that there is no downtime. So I think that this is really the main objective of this, to really make sure that we launch this production-ready network with no downtime, and making sure that it all runs smooth, right? Users can be onboarded, stakers have no issues staking and delegating. And so I think it's really about uptime.
So, and you mentioned also that you're gonna grow the validator set over time, and when there are many providers here at this conference, and there are probably several watching and closely watching your launch, and what would be your pitch for a provider who's not yet heard about your launch, or who has not yet your validator, to become one in the future?
I think the way that we designed the tokenomics of IOTA is really to make sure that we onboard those who really are committed to the protocol and to the network, right? And so what we're doing is we have 8% base inflation on the token, right? So that means that for stakers, it can be 10-15% APY, which is obviously quite sizable, right? And is a very big incentive for validators to come onto the network, secure it, and to be part of that, right? So I think that's the first part. The second part is we really focus on increasing the token utility of IOTA, and we're doing that by really focusing on real-world adoption, right? So we have some amazing projects that are coming on-chain where actual governments will be issuing transactions on the networks, and as part of that, they're paying transaction fees, and we will burn those transaction fees. So, right, so it's very unique, our tokenomics, where they can potentially even become deflationary. So I think it's a big incentive to actually be early in the network launch and be an early staker and an early validator in the rollout of the entire networks.
Oh, that's amazing. What is the high-level process to become a validator? Is there, can I apply somewhere, or do I go into testnet, or what is the way?
I think the most important step is definitely to be on the testnet, right? Because it is a new piece of software. It can be quite complex as well. There are obviously also the requirements on how to be a validator, and that gives you this learning experience as well. And then I think it's permissionless, right? Like anybody can actually spin up a validator and acquire stake. The minimum stake requirement right now is around 2 million IOTA tokens. So I think it's like 300, 400K. Obviously, all of that, our objective as our R&D team is to really gradually remove that even further, to really make sure that anybody can become a validator, and that we really fully decentralize this in a way where it is resilient, but also really scalable, right? To really make sure that we meet the performance requirements. But anybody can then spin up a validator and be part of securing the network. And then it's really just a race to get as much stake as possible by building up trust in the community as well.
Right. When you were just talking about exciting projects, obviously my curiosity is tickled.
Yeah.
And is there any a project that you could share a little bit more about at this point?
I think the most relevant one is probably the liquid staking token, or liquid staking dApp, that we call a Swirl, right? And this is actually something that we've been building over the last few months with a very experienced team on Anchor, who's actually also running a validator and building up a lot of infrastructure there. And so that LST will launch shortly after the mainnet launch, and so then users can actually do staking, earn the staking rewards while participating in the ecosystem. And obviously, hopefully, then in the future, there will also be token airdrops and things like that.
That sounds amazing. Is there, when you approach staking, was there any kind of idol you were following, or some good practice that you've seen in other protocols? Because the beauty about the Web3 ecosystem is we work together and learn from each other, and this is also a success factor of the summit here.
Yeah. I think there was a lot of learnings from other ecosystems as well. And I think because we were kind of late to the game as well, we were able to get all of these learnings from them, right? And so I think I wouldn't say that there's like a specific network that we looked at, hey, we want to replicate that, but we did look at it from a viewpoint of like, hey, we want to have this mixed like pool of validators where there's community projects that will be empowered as well, where there's also professional validators, and then also some new sort of partners, customers that are using IOTA on a day-to-day basis, that they also have a validator. I think from a design perspective, what our focus right now is really to make sure that we don't just have this fixed validator set based on staking amount, but then also have sort of like a variable component there where there might be a rotation between validators simply to increase the validator set, right? Because I think that's an important thing for the decentralization of the network, that is not just limited to the 150 validators, but that we also give the opportunity for new validators to come on the network and to secure it.
Yeah, that makes a ton of sense. Is Do you have anything planned on after launch subsequent that you would like to go into detail about to point an intention towards?
Yeah, we have a lot of amazing campaigns that we're planning right now. Actually, because our objective is really to get the staking a ratio of stake of IOTA stakers to 60-70%, right? Because I really believe that we can achieve that because IOTA holders are very long-term holders and really believe in the project. And I think now we can really make sure that the majority of the network is securing it, because then we also have this economic security backing the network, and that in turn will really help us get new use cases and new adoption happening on the mainnet, right? And so this is why we are focusing on campaigns to boost the staking rewards through some incentive programs. We're also doing some other marketing campaigns and promotions by building out the ecosystem, that we also have like a sort of like a circular economy, right? Stakers, LST, deploying it into DeFi protocols, deploying it into liquidity pools, and then in turn boosting the IOTA adoption.
As a delegator, where do I go to learn about these?
We have an amazing docs site, so you can go to docs.iota.org. We also have a dedicated staking page for IOTA. So I think you can just Google iota.org staking. And obviously, we also have a wallet. So you can just download the new browser-based wallet for IOTA. You can see all the available validators in the wallet, and it's a very seamless experience to stake.
That sounds amazing. How do I get in touch with you?
You can contact me on Twitter, or you can contact me on our community on Telegram or on Discord. I hang out in the community a lot, so I think I'm quite approachable. So you can definitely reach out there.
Do you you talk about the community communication there? Where does it happen?
I think most of it happens on Discord, because that's where most of the people are. Obviously, Twitter is really important, where we publish all announcements there. And so I think Discord and Twitter.
It sounds amazing. I wish you the best of luck for the launch. I'll be also closely following and check out how to stake there. Thank you very much, Dom, and continue having such a great success at this conference.
Yeah, thank you, Benjamin.